Good morning, ladies and gentlemen. My name is Peter Akerley. I'm President and CEO of Erdene Resource Development Corporation. I'm a geologist that went into Mongolia as it first opened up to foreign investment in the late 1990s. And I saw an opportunity to explore one of the world's most prolific gold and copper belts, an area that had not previously seen modern exploration. Happy to say today that initial objective has come to fruition. We now have a new minerals district, multiple deposits, anchored by a new high-grade gold mine, open pit, extensive opportunity to expand around that pit, two other very large systems in the neighborhood that we're going to move forward on. And we struck a partnership with Mongolia's largest private mining company, whose parent is actually the largest business conglomerate in Mongolia, who brings all of the elements you would need to build out a new mining district. So let me get through some of those details with you. That new minerals district we call the Hyundai Minerals District is located in southwestern Mongolia. It's one of the most prolific belts in the world. As I mentioned, Morintal, the largest gold deposit, anchors the west side, and Oyu Tolgoi in southeastern Mongolia, soon to be the fourth largest copper gold mine on the planet. In between this, we moved into this district over 10 years ago, and we were first movers. There's really been no competition, multiple deposits, and a lot more to come. The reason that it wasn't explored is that it was isolated. There wasn't a lot of infrastructure in this area, but that's changed as well. You can look at this area of southern Mongolia, northern China. Today it has multiple blacktop highways, railways, mines, iron ore, gold, copper, coal. It really has become a breadbasket of metals and minerals going into the Asian region. In terms of our property portfolio, you'll see on this map three large hydrothermal systems. In the south, we have Bayan Hyundai, anchored by this new open pit gold mine. North of that, you have Altan Nar, which is a bit of a different animal. It's a gold polymetallic, 16 kilometers north. And then to the far east, we have the large Huvenhar porphyry system that hosts the largest undeveloped molybdenum project in the Asia region. So a whole range of commodities you would expect with ARC-related deposits. We poured first gold in September. We've just entered into a 6-month startup phase, and I'll come back to some details on that. Our objective is to get to 500,000 ounces of production over the next 6 years from a deposit that has a 4-gram head grade. So this is 4 times at least the average grade of open pit mines globally. As I mentioned, we're doing this with a partner with a 50-50 arrangement, but we did keep back a 5% NSR that kicks in after the first 400,000 ounces of production. So the economics shift in our favor at that point. The ramp up that we're going through is a 6-month long period. By the time we get into Q2, we expect to hit that steady state. But during the first 3 months, we've actually achieved more than I expected we would. We have exceeded the recoveries we anticipated. We've generated $30 million in revenues in that first few months, and the plant's working exceptionally well. So as we move into the next quarter, we'll start to ramp up that head grade towards the steady state, 3.5 to 4 gram range. This is what the site looks like. You can see in the top right, we've just begun to get into the first benches, stripping off overburden, moving some low grade into the plant. As I mentioned, low grade for us is 2 grams per ton, so quite a high grade for an open pit to start up. The plant, as I mentioned, we're targeting recoveries of 93 to 95% at 4 grams. We're actually exceeding 95% at 2 grams. So very positive outcome as we see this start up, and we have hit capacity. Not quite commercial, which is 30 days steady state, but we're running that plant at our targeted capacity today. The ore is coming from 2 locations, the Bayan Hyundai main pit in the south and 2.5 kilometers north, a very high-grade satellite deposit that's at 7 grams per ton. But the takeaway from this page, which I'll come back to, is all of that blue shaded area has never before seen modern exploration. We're the first out here. We've only been doing mostly shallow drilling, so exceptional upside to expand as we move forward. Just quickly on this page, I think the main takeaway is our steady state production is 85,000 ounces per year. This first 12 months will be 67 because as we ramp up, we're producing at about a 50% rate. So 67,000 ounces in the first 12 months. The The net present value in this project, as you can imagine, for anybody in the gold mining business, has changed dramatically over the last 2 years. From our feasibility study in 2023, 170 million MPV, now approaching $1 billion MPV at current gold prices. Keep in mind this is a 50-50 split between ourselves and our partner, with our kicker royalty kicking in and, at 400,000 ounces. A couple other things to point out on this page. We are projecting a $1,250 all-in sustaining costs. That'll become more apparent as we move through a couple quarters of commercial production. And I'd also point out, we brought this facility into production through construction for $115 million US, which is less than half of what I would expect it would have cost to have done this in North America. Not only did we build that entire mine site, we have a 315-person accommodation village that we've built out as part of that capital as well. There's $123 million in debt sitting in the subsidiary company that will be paid off as rapidly as we can. We expect that to be paid off in late 26, early 27 at this gold price. And that cash flow coming back to shareholders at that point, either to be delivered back into new development projects or distributed to shareholders through share buyback and or dividends in the future. Coming to the exploration side, this is the map I showed earlier. I want to give you a couple of examples of the upside here. We really focused since 2019 on getting that economic pit to production and then using the cash flow to explore this new area. The most recent discovery we have is Ulan, which you see in the bottom left. All of these deposits are unique in that they're very high grade. You know, it's not unusual for us to see 200 to 600 gram meter intersections in each of these areas, but a couple of them I'll share with you just so you get an understanding of what's to come. At Ulan, this is 0.5 kilometers from the pit. It's not yet in a resource. It's a feeder zone that is 330 meters deep and open at over a gram. It has multiple high-grade intersections of 20 to 40 meters of 7-8 gram material, and we'll start to develop this more as we move forward, more exploration in this area. To the north, I talked about Dark Horse. So Dark Horse is a high-grade satellite deposit, but we've only really explored the southern part of this. Over the last few months, we've drilled another 5,000 meters along a 1.5 kilometer trend to look to add additional resources. Those results will be in the market as we move through Q1. But to give you a sense of just how high grade this is, you look at some of these intersections, 30 meters of 5 meters of 123, starting from surface. It's an extremely rich supergene zone, and we're now drilling a long trend of this. I can't promise everything we hit is going to be 7 grams. It's pretty unique, but we know it's mineralized as we move north. And either we'll have ore to move into that plant, or we'll have feed for a heap leach that we're starting to look at conceptually as well. Moving north to the second system, Altan-Nar. This is our first discovery, and we had established 500,000 ounces of gold at almost 2 grams in the near surface here. But we shifted our focus when we found Bayan Khundii. So not a lot of exploration has taken place here. We will shift our focus up here in 2026 and see this as a second deposit that can come on stream as we move towards the end of the decade. That 500,000 ounces of gold that we've already established just sits in those 2 red outlined areas. So tremendous upside for exploration here. Just to sum up the relationship with our partner, Mongolian Mining Corporation, that subsidiary is on the left-hand side of this slide, 50-50. 5% JV kicks in, or 5% NSR kicks in after 400,000. But we kept another subsidiary in country that we have a 100% interest in. And in that 100% owned company, we have the Huvenhar Zunmod molybdenum porphyry system. This is a very large porphyry, has a molybdenum deposit in the southeast corner, and a new copper discovery we just announced in the last couple of weeks. 3.5 kilometers northwest of the Mali deposit, we intersected 65 meters of 0.63, something we'll start to follow up on with deeper geophysics and drilling in 26. In terms of the Mali deposit, we established an updated resource in September, 630 million pounds of Mali. Molybdenum's trading at about $25 a pound, so there's about $15 billion of molybdenum here starting at surface, a project we're now going to move forward with a PEA on and deliver that by the middle of 26. We have another early stage project in the Oyu Tolgoi belt. We'll do some drilling on that this year. We have a market cap of approximately $570 million today, $440 US. If you look at the cash flow from that gold project, we're trading at about 4 times projected earnings from that reserve. So plenty of upside when you think about the expansion and other projects I just shared with you. Eric Sprott's our largest shareholder, great shareholder register, very tightly held. In summary, heads down, get Bayan Khundii up and running, expand that deposit, add the Altan Nar mine, all self-funded by gold production, and then get into these 100% owned projects as well, Zunmod PEA, copper exploration in 26.